So in today's video, we're going to go over this recent prospectus submitted to the SEC by Bitmine, allowing them to sell stock in the open market at the market price to raise funds to buy more ETH. Now, we're going to go over the basics of this, how to interpret it, so that you don't make some of those catastrophic mistakes that other people do. So before we get started, my name is Colin. For those of you who are new around here, what I do is I look at crypto and stock projects that have solid long-term fundamentals. Now, remember, none of this is financial advice because the crypto and the stock market is incredibly volatile and you can lose your investments really easy. So make sure that you do your own due diligence and research before you get into anything. Finally, I'm not sponsored by anybody. I'm not here to sell any courses or have fancy telegrams or Discord group. I'm just here giving you my raw thoughts, a 9-to-5 working person like everybody else, doing things that I'm interested in. So with that out of the way, let's get started. So before I jump into the details of the prospectus, let's just look at the stock and what it's doing. So today it closed around $61.63. It was actually trading up closer to $70 and over $70 today. And from the time that I started talking about this about a month ago, for those of you who don't or who use Twitter or X, you can give me a follow on X because I can tweet things out a lot faster than I can make a video, okay? So if you use it, make sure you follow me on X as well. So right over here, you could see that about a month ago, I started talking about it, and it was roughly trading at $30 to $35. I had a bit of a drop, a pullback, but since then it's done pretty well. It's gone over 50% gain within a month, and it's been running really hard. And especially in the last 5 days, you could see it's really grown, right? It's gone from $40 all the way to, $65, $68, $70, okay? So the stock is running hard. Now, let's take a look at the prospectus. You could see that this thing is a beast. There is a lot of details in the prospectus. So if you have time, you can go over the prospectus, get into all of the little details. But what I'm going to do today is I'm going to summarize and zoom out, take a look at that big picture. Because sometimes I feel like there's so much details in there that you focus on the little trees, the little branches, and you miss the entire forest that's there. So let's break down what this prospectus means. So this prospectus is a legal document that Bitmine is filing with the SEC so that they can tell the public what they're offering. So if you take a look at it and break it down, some key things, they're going to tell you how much money they're raising. They're actually adding on an additional $20 billion. So this is the ability to raise an additional $20 billion. That's an update from their earlier July prospectus, bringing the total to about $24.5 billion. The next thing is, what are they going to do with that money? Well, they're buying ETH. This is an ETH Treasury company. So the main thing that they're going to do is acquire ETH. And then they tell you the risks involved and then the details. So for those of you who don't understand the jargon, the legal language, I hope this clarifies it. And if you don't, if you could use this everyday example. Let's say your best friend Sally down the street wants to start a lemonade. So she's going to give you a prospectus, a document. In this prospectus, she says, give me $5, okay? So that I'll give you 10% of the profits, okay? So that's her offering. She's going to use that to buy the lemons just like us buying ETH. And then she's going to tell you about the risks on a rainy day. The stand's going to go down. You're not going to sell anything. You're going to make $0. So those are some of the risks. So that's exactly what a prospectus is. It's a simple business plan that they're offering out there so that they can raise capital. Okay, if we look at the details of how much money they're raising, well, they're raising $24.5 billion. The initial one actually came on July 9th. So they're actually amending this initial one. They're just updating that initial prospectus. And then on July 24th, they added another $2.5 billion. And then this week right over here, this is the $20 billion that they're adding. Now, if you take a look at this and you misinterpret the data, it can actually send the stock price in a catastrophic direction. And we'll take a look at that in a moment. But the rest of the details is they're actually updating the current shares. So right now there's 173.5 million shares that's outstanding with the ability to raise all the way to 589 million at roughly a share price of $59, okay? Which means that it's a possible 240% dilution. But whenever these things come out, people are really scared of that word dilution. But if you do it in a correct way, just like what we talked about, accretive issuance of shares, you can actually increase the value. For those of you who don't know about accretive issuance, make sure you watch my video part 2. It's going to talk all about that where I go into that example in depth, okay? So let's take a look at the share price and see what happened on July 9th and July 24th. So here's Bitmine's chart again, right over here. It's marching along, in late June, and then on June 30th, Tom makes an announcement, okay? That's the $250 million that's raised. Of course, that sends the stock into frenzy, and if you guys remember that, it actually went all the way to $160. Stock has a pullback. And then around July 8th, July 9th, they dropped that $2 billion prospectus. It goes into a frenzy because people misinterpret the business, what they're doing, and of course they're afraid of short-term dilution because there is some short-term dilution. So it actually sent the stock from 160 bucks all the way down to $40. Okay, so that's when I started looking at the stock a lot more closely and studying the stock, studying the company, seeing what they're doing, seeing what Tom is saying, and really trying to understand and giving myself a chance to enter this stock. Okay, so this ATM selling at the market or in the open market. So they're selling in the open market price. Okay, so here's the $20 billion. What do? They raise that capital, but they're gonna do it step by step in an incremental fashion, so they do not crash the price overnight, right? You can't just sell $20 billion of stock to raise fund. That's going to drop the stock to zero. But the key is they're going to do it at some future date, not now. So everybody always has this thought that when they see these things, they're going to think, oh crap, they're going to sell $20 billion in the next few days. No, this happens gradually over time for those exact reasons, okay? So the mechanics. So why do they do that? Because it gives them the flexibility, this at the money. You don't have to sell everything at one time, at one fixed price, the entire chunk. So it gives them flexibility. They can sell at the ATM when stock price is favorable, right? So when the shares, just like today, okay, when it went to $70, the market price has increased dramatically compared to the NAV, okay? When the market price runs incredibly large compared to the NAV, it creates that premium. That's when the company is going to go out there. That's when they're going to sell stock, okay? You don't know that they're doing it, but they're executing it. That's why you need a really good fund manager. And in this case, it's Tom. So it avoids large sale at a low price, causing a really rapid dumping, okay? So during the last video, we talked about a very important concept, accretive issuance. That means issuing stock in a way that actually adds value to your asset per share, or in this case, your ETH per share, okay? So we're gonna do accretive issuance, but at the market price, at the ATM. So that's what they mean by when they say selling at ATM. Can these two things happen? Because some people will say, oh, if you're selling stock at the market price, you're going to dilute shares. Yes, in the short term, you may. But if you do this over the long term in an accretive issuance way, you're actually going to add value. You're going to increase that ETH per share that we spoke about. So for those of you who don't know what this is, accretive issuance, go and watch part 2. I go over that in depth in part 2. Okay, and I'll link it below. So if you take a look at these two things, this selling at the market, it's actually the mechanism for you to raise those funds in order for them to buy ETH. Whereas the accretive issuance, that's the outcome. That's the intended outcome that you want, okay? So you want a positive outcome because by doing it in an accretive issuance way, you're going to increase the NAV per share. You're going to make it higher, adding more value to your shareholders, and you're not going to dilute them, okay? So when you hear people talk about selling at ATM or at the market price, that's what they mean when they say, I have dry powder. I'm going to raise money. That's the dry powder so that I can deploy it and buy ETH with it or whatever your asset is, okay? So before we get back into our model, again, take a look at what happens with accretive issuance and share price. Today, I saw Tom on CNBC. He reaffirmed again what he thought the price of ETH was going to go to. He actually said it will go to 10 to 15,000. But here's his post. He talked about how ETH would reach 7,500 by year end and then 25,000 by 2028. Would validate his argument that ETH would be one of the largest macro trade during the next decade. And he just pointed out that Standard Chartered, they revised their initial estimation of ETH going to 7,500 by the end of this year from 4,000 and then to 25,000 in 2028. So you could see that there are a lot of people who are bullish on ETH. And if we just come right over here, this is some research from Pantera Capital. They're one of the tier 1 firms, VC firms that are invested in BMNR. So they are invested in Bitmine. This is back on August 10th. So it's a couple days old, but it's still pretty good. So what they're showing is that they're showing from June 30th, right at the beginning of July, when Tom started all of this. Look at the ETH holdings right over here. So the ETH holdings is going from 107,000 that day all the way to now on August the 10th, okay? So 1.1 million ETH, okay? That's a growth of 972% ETH over that period. So that's a very short period. That's a slightly over a month, okay? Now, the fully diluted shares have gone from 66.5 to about 164, okay? So 147% over that same time. But look at the ETH growings. And then if you look at the ETH per share, or in their terms, their EPS, it actually went from 1,600 to about 7,000 right over here, a 334% growth, okay? And then the ETH share price, so in that same amount of time, the ETH share price only appreciated from roughly 2,500 to 4,000. So that's a 71% increase. And then in terms of the NAV expansion during that time, that's a 63% increase. But take a look at this right over here. BMNR's price went from $4 to $51. That's an 11x, 1100%. Now, jumping back into our model, before we get into the details again, I'm just going to remind everybody that I'm actually not inputting the staking values, okay? So unlike BTC, where you can't stake, there's no smart contracts in terms of doing DeFi. In ETH, you can actually stake it for roughly 4% a year. It could be more or less depending on where you stake it. Right now, if we look back at the data on August the 8th, they had a holding of roughly $3.3 billion based on their ETH holding. So if you stake that, that was 132 million. Now, as of today, August the 13th, the Treasury holds about $5.4 billion, okay? And if you stake that at 4%, it's actually $216 million that they're going to make on net earnings, okay? And that we're not actually accounting for in our model. So it's actually going to add a higher EPS to our model. And then finally, this is just some future date, okay? By the time Tom and, the team at Bitmine has built up $20 billion, you're looking at about $800 million of just staking revenue. This is the company's revenue, their net revenue per year without doing anything else. So going back to this model, this accretive issuance. So for those of you who missed it, take a look at my part 1, part 2. I'll link it below so that you can go over it, okay? But on August the 8th, when we looked at the balance sheet, this was my model, okay? I said that if ETH was 4,000, it was roughly trading somewhere around there. This is how many ETH units they had, 833,000. So the holdings was roughly 3.3 billion, okay? The outstanding share at that time was 131 million. And we're going to issue this in an accretive issuance, okay? So we're going to increase the shares in a way where it adds value towards our ETH holding and we're not diluting it one for one, okay? So you could see the NAV at that time was $25.44. And if you applied a multiple of 2.5. I know this is a little bit high, but like I said in my previous video, stuff like Metaplanet, they traded between like 2 and 7 at some point. And even MSTR during its earlier phase traded up at 3.4 in terms of its MNAV, okay? It's going to come down over time as the treasury gets bigger, as the business becomes mature. So just use 2.5 right now. We had a share price of $63.60. That was what the model was predicting on the 8th, okay? Now, we said that by December, we would come up to a price of 8,000 in ETH, not far off of what Tom is predicting and what Standard Chartered is predicting. So by February 2026, the price would go to $12,000. This is the ETH unit, 2.5 million ETH. This is the holdings. This is the number of shares in an accretive fashion, okay? So the NAV at that point is roughly $140, and then we apply the MNAV. That's where we get that price. Now, this was just a model predicting it. What is the actual number today? So going from August the 8th to today, you can see right over here, they reported a total of 1,150,263 ETH tokens as of today, valued roughly at 5 billion. And that means they bought 317,000 more tokens than 1 week ago. And if we come back here, we can see that we have 1,150,000 ETH. And if you take that with a spot price of 4,700, you could see that translate to 5.4 billion. So within a matter of 5 days since announcing this holding, so the ETH value, the holding value of the company has increased by 62%, whereas the number of outstanding shares have only increased by 32%. If we take a look at the NAV, they've actually expanded that NAV right over here from $25 to $31 within that span of time. So he's moving a lot quicker than what I thought he was going to do compared to last week. But it's hard to keep up with Tom. And I do read all of your comments. And some people were saying, how come you're late to this video? I can't move as fast as Tom does. He actually buys ETH at an incredibly rapid pace. So nothing like we've ever seen in this market before. Now, if you take a look at the MNAV, 2.5, you multiply it by that MNAV, you actually get a value, BMNR's value on August the 8th of $63. And then if you take this, multiply it by 2.5, you're actually at $77.90. Now, this is what the model predicts, okay? What does the market trade at? So if I just come over here and I look up the market close on August the 8th at $51. Now there's a discrepancy between my value or our model's value versus what the actual market is. Now, if you go back to this MNAV, okay, and if we just, you can add in any number you want, but if you add in 2, you can see that this value with the markets closed on Friday, August the 8th, it's actually pretty close. So the market is saying they're paying a premium of 2 in terms of the NAV. And that's what most people's calculation comes out to be. But of course it fluctuates, okay? Now, if you do this by 2 as well, you can see that the closing price today, so I'm gonna go over here and show you. You can see that Bitmine closed at $61.63 right over here, okay? So that's what the actual close is. That's what the market traded at. And you can see this value here. So our model predicted on a NAV of 2 to be 62.32, so $62.32. The actual market closed at $61. So that's actually pretty close. And like I said at the beginning, we're going to choose a value between 2 and 2.5. I'm giving it the higher value because at the beginning, if you take a look at today's share price, and here's the Bitmine chart, you can see August the 8th right over here, 9, 10th, 11, 12, 13. So you can see today it traded between sort of $60 and all the way at the top of the wick at 71, almost $72, okay? And of course it closed at $66 today. So you can see that it traded in a really wide range throughout the day. And whenever it pops up all the way up to $70, you can imagine on some of these days that Bitmine may go out there and sell at the market price, right? When it makes a premium to its NAV, okay? When it goes onto a premium to its NAV, that's when they're out there, that's when they're selling. Now, you don't know exactly when and what they're going to do. They don't tell you the exact date, but you can bet that they're doing that. And when we come back here, we could see that this is what they're trading on the market, right? That's the BMNR price, that's in the market price. And look, our model predicts a pretty close number in terms of looking at a different NAV. But when they say they're going to sell at ATM, okay, at the market price, at the open market, this is what they're talking to. So if they're selling at the market price, notice the NAV, right? Take a look at these NAV. They're selling way above their NAV, capturing that premium, and then going back and buying ETH with it, okay? So they're taking advantage of that. So I hope this makes that concept a lot more clear to you, selling at the market or in the open market. So just coming back to the chart and finishing up right over here, I think in the long term, that $20 billion, that's the ammunition that they have, okay? And that they can deploy at the market price in order to capture that premium. And Tom will do it best. None of us know what's actually happening behind the scene until he gives us his chairman's update or from the official account, okay? But long term, I think smoothing it out, it won't do a dent to the price. I actually think by him announcing it all at once in one go, it actually helps it because you don't want to hear every single week, every 2 weeks, we're going to issue this, we're going to issue that amount. It actually spooks the retail people who don't really understand the core mechanics of it, okay? So I think long term, we still go up from here. We have a lot of momentum. There's a lot of good macro factors, and I think the stock continues to do well. Yes, there's going to be short-term pullbacks, there's going to be profit taking, but the stock does well. So to end the concept right over here, this prospectus, if interpreted the wrong way, remember back to July 9th, July 10th, that's when they initially announced the first $2 billion. And you could see the stock just tumble. Look at this red candle right over here. This is a nightmare. For those of you in crypto, this actually looks like one of those shit coins that are trading, okay? So it tumbled because the market misinterpreted that signal along with profit taking as well. It actually created a very good entry for all of those people who are looking at it. Once it bottomed out, it had another drop, another like about 20% drop, okay? But it bottomed out, and that was actually one of the best entry times. Now, in the long term, I think this is going to rip up that way, okay? It's going to go into price discovery now that we've gone through things, okay? And I'm going to talk about more important dates in the future when I do an update for you. But I think we've gone through sort of the worst of these prospectus offering where people see $2 billion, $4 billion, $20 billion, $24 billion. This is how you should interpret it. I hope that this was helpful and you found it educational, you found some value out of it. If you did, please consider subscribing towards my channel. Give the video a like. Let me know what you think about in the comments and if you continue to enjoy these videos. So I will see you next time.